Good afternoon, everybody. I think we're live here. And today, just want to give you guys the opportunity to ask any questions that you want about money, about personal finance. So we'll take a little bit of time. You had the opportunity to ask questions ahead of time if you wanted to. And then obviously you can join us live today. There's a chat box here if you're with us live where you can type in your question, and we'll get to as many as we can today. We also did have some people submit some questions ahead of time, and we'll get to those also. So just start off introducing myself. My name is Nicholas Cook. I'm the founder of Money 101 Academy, the YouTube channel here, but also have a website and a membership that I run as well. And just want to tell you a little story, a little backstory to how I got here. So back around the year 2000, so over 20 years ago, I was in college and I was thinking about wanting to learn more about stocks and the stock market and investing and all of that. And I started to realize fairly quickly a few things. One was that if you want to, books are helpful. YouTube wasn't really a thing back then, so it was hard to find videos. There was websites, so finding blogs and that kind of thing was helpful. But if you were looking to get help from another person, your options were a little bit more limited than they are today. So, for example, if I wanted to work with a financial advisor, or a financial planner, you've got to put out some money to invest to work with them. And I realized looking back that there was kind of a segment missing where you could try to get help with money without, if you weren't quite at the point where it made sense to get a financial advisor or financial planner, like where could you go to learn about money? And so, that's kind of some of my thought process. It would have been nice to have something like an online membership where there'd be other people there too, and we could ask questions about money, and you wouldn't have to fork over $500 or thousands of dollars, like you would with a financial planner or financial advisor. So, I created Money 101 Academy, where we do group coaching through Zoom, and we have a private Facebook group, an online course. There's a one-on-one coaching session that comes with it, but it's that way where you can get in to start learning more about money and personal finance without making a huge upfront investment. So I'm super excited about this because, again, I would have loved to have something like this back over 20 years ago when I was starting my journey. I think it would have made things go quicker. And I'll share one more thing about that. Part of that inspired me to study finance in college. And that was great. I learned a lot studying finance. But looking back, it would have been nice if it was a little bit more practical in studying finance. I had some great teachers. I did learn some great things in it. But I felt like even after I got a finance degree that I wasn't quite sure how to invest money. Like, where do I start? Should I buy stocks? Should I buy a mutual fund? Should I, ETFs weren't really a thing back then. If I want to get in the stock market, what should I be doing? And obviously, there's other ways to invest. You don't have to use the stock market. There's real estate and other ways too. So yeah. So today, we'll get into some questions here in just a minute. Want to say here, even though I did have a career for several years as a financial advisor and helped manage over $40 million. So I did have quite a bit of experience doing that. Currently, I'm not a financial advisor, but I do financial coaching, teach personal finance at school and through Money 101 Academy. But just, even when I was working as a financial advisor, I helped teach some classes at a college on the stock market, and we would need to say that, we don't know your personal situation with all of your money and everything, so don't look at this like we're giving you advice. But this is educational, and the things we say could be helpful to you with your money situation. Yeah, so let's get to it. So I have, we'll start with a question that, let's see here. So again, you can ask your questions in the chat box here. And so take a look here. So we're going to start with a question. Let's go to Luke here. Luke asked, how do stocks work? It's a pretty open-ended question, but how do stocks work? So we'll kind of start from the beginning. So when a business is created, they typically, as soon as they're created, they typically don't have stock. So we'll just use Amazon as an example. For many years, Amazon, which most of us, or if not all of us, know, from seeing their trucks drive around and their website, that there was a period of time where Amazon was not a very big business. Jeff, it's a whole nother it's an interesting side story about Jeff Bezos and his creation of Amazon. But from day one, they did not have stock. You could not invest in Amazon stock through the, stock exchanges, New York Stock Exchange and whatnot. So there did come a time, though, Amazon was in business. Maybe they registered as a corporation or an LLC, however they did it originally. And there came a point where they realized, we've got some traction here, we have customers here, let's try to start scaling this more. And so one way to do that is to create stock that the public can buy through a stock exchange. And so they decided to do that. Another word for stock is equity. And so what is that? That's called an initial public offering, or an IPO. You may have heard this before if you read the Wall Street Journal or pay attention to the stock market. The IPO is your first opportunity to buy Amazon stock when they did that. And let's just say, I don't know exactly how much equity they raised, but let's say it was $1 million, it was probably way more than that, but $1 million of stock. And so you can buy Amazon stock now. Let's say it was $10 a share. So they take $1 million divided by $10 a share, and then that leaves however many shares $10 into $1 million is. So everybody, you now can buy Amazon stock. It's $10 to get started. And Amazon then has this money that they get, and they can use that to, invest in their company. They can use that to, like today, they might buy more trucks with that money, Amazon delivery trucks. They might use that to help with their website, web design, enhancing their website. But they would use that money to help Amazon scale more, become a bigger company, invest in other projects that will help them grow, buy warehouses. And so then when you buy Amazon stock, you get there's common stock and preferred stock. We'll just focus on common stock today because that's what's more widely known. So now let's say you own one share of Amazon, you pay $10 for it. you are now a shareholder. You are kind of, in a sense, a part owner of Amazon. And I'm going to explain how you are a part owner of Amazon. For one thing, you get voting rights, which honestly doesn't mean a whole lot unless you have a lot of shares. So if you own like over 50% of Amazon stock, then you could make a big difference with Amazon, with your voting power, with different things you could do. But most of us aren't in that boat. And then, just like if you were to have a lawn mowing business, let's say, and you have 2 lawns that you mow per week, and you're making $25 a lawn, so you make $50 a week in your lawn mowing business. If your lawn mowing business, if you start getting more customers and now it's all of a sudden you're making $200 a week, you get to, that's more revenue, and that's also more potential profits that you get. And on the flip side, if you somehow lost all of your, you only had 1 customer and you were losing customers, your revenue and profits would go down. So it's the same way with Amazon, with their stock. If Amazon comes out and they beat their expectations and earnings, then you get to share in that. Just like as a business owner would with the lawn mowing business, you could now potentially have more money, more profits, because Amazon is doing better. So that's in another sense how you are kind of like a part owner of Amazon. You get to share in their profits and their losses if the stock goes down. So if the stock goes up, it could go from $10 to $20. So if you were to sell the stock, then you could make a $10 profit. Or if the stock goes down, to $5, and you sell the stock at $5, then you lose $5. And so, of course, all of this gets compounded as you start buying more shares, thousands of dollars of shares or hundreds of thousands of dollars of shares. So hopefully that's helpful to you, Luke. Kind of a good overview of how stocks work and how they're created, and how, at some level, how you can buy them. So, and let's see here. What else do we got here? Okay, we have a question here from Paul. Paul asked, he submitted this one ahead of time. What is an I bond? So bonds are lower risk typically than stocks. Bonds, the government has bonds. Companies like Amazon sometimes have bonds. So let's say if Amazon had a bond, what they're doing is they're borrowing money, and then they're saying they're going to pay it back to you on interest. So the government can borrow money from anybody that wants to do that, and they'll pay you interest for letting the government will pay you interest for you letting them borrow your money. It's kind of like they're taking a loan from you and they're going to pay you interest back on the loan. Just like you could go get a loan at a bank and you pay that back, you pay interest back on the loan. So it's just flipped around the other way. So an I bond is when the government is borrowing money from you. It sounds kind of weird, but yeah, the government can borrow money from anybody that wants to get in on that game. And so there's different denominations you can do. I don't remember exactly, but I think there's like $1,000 level, a $500 level. I think there might be a $5,000 level. It's been a little while since I've looked at that, but let's say you decide you're going to let the government borrow $1,000 through an I bond. You can do that, and the interest rate that they will pay you on that will be adjusted for inflation. So You may have heard of that word more recently, more frequently in the news, in the media. Inflation has been going up quite a bit, as we see with the gas pump and at the grocery store, and with food and gas in particular, and the housing market, and a lot of other stuff. So maybe a good time to have gotten I bonds would have been a year or two ago, before all this inflation hit, because as inflation was going up, as you see gas prices going up, then your interest rate that you're making on that, the rate of return you're making on that I bond is going up. So let's say it was 1% when you bought it, and inflation went up 2%. Well, now you're going to make, it's not exactly, but maybe it would be 3% instead of 1%. There's a whole different way to calculate all of that. And I think the maturity level for an I bond is 20 years. I believe that's correct. And you can hold them all the way out to 30 years. But you can always sell them earlier, sell them back, get your money back earlier from the government. And there's a website you can go through to get I bonds, treasurydirect.com. I've used that before. It's the last time I looked, it was fairly user-friendly, and that's one way that you can buy something like an I bond. You can probably do it through a brokerage as well. Like if you had a financial planner, they could probably get you an I bond as well through your brokerage account with them. So let's see here. So that's I bonds. So hopefully that's helpful to you, Paul. And let's see here. So if anybody else has a question, again, you can ask it there in the chat box. If you're here with us live, you can do that. And so all right. I guess we're just sticking with stocks and bonds today, which is fine. They're good topics. So, if you're going back and watching this later, or if you're with us now, it'd be great if you could subscribe to get more great content about money, personal finances, to help you work towards financial freedom. Please like this video. And also wanted to share with you, I created this class, and I took it from my experience of working as a financial advisor, my experience of investing, and I think it's titled something like How to Forex Your Money, what I learned as a financial advisor. That's not an exaggeration. So there is a specific way that it is possible to Forex, to, if you have $10,000, to turn that into $40,000. So if you want to take the class, you'll learn more about that. There's a link in the description box below. If you're interested in joining that, just type in your email, your name, and I'll send it over to you right away. And that's a wrap, everybody. So hope you got some value out of this. Enjoy the rest of your day.